Hey, everybody, you're getting divorced. Now what? Well, here I am. I'm Serge with FindMyHouse.ca and XP Realty. And as always, we have the beautiful and lovely Chita from the mortgage group that's going to help us navigate some of our options and kind of rules that might apply to you in trying to deal with a marital breakdown and the division of those assets, such as the house. And of course, for me, as far as I'm concerned, the easiest is always to list the property, sell the property, and then the equity is put into a trust and then divided based on whatever agreement both parties have agreed to, essentially. And that can be one of the easiest ways of dealing with that matrimonial home. However, there are options where there are times where one of the spouses wants to stay in the home and may want to buy the other spouse out. So, Chita, can you tell us a bit about what rules and options they may have in this respect?
Yes. So, governments and financial institutions have recognized the reality of the fact that marital breakdown is quite common. I think last statistics I saw was 40%, but it was down, but only due to the fact that people are choosing not to get married, right? So it's the only reason why it was down. But that being said, so they've created a spousal buyout program to allow one of the partners to remain in the matrimonial home. Typically, sometimes when you have children, the children are more comfortable in the home, and it's ideal to want to keep it, right? So in doing so, we're able to access the equity of the property, all of the equity of the property, to be able to kind of allow for, the division of assets and to keep the house. Okay, so also there's programs where I think the government for using RRSPs, a marital breakdown does reset you to become a first-time home buyer to access those programs as well. So being able to borrow from your RRSP tax-free, as well as the 30-year AM. So essentially is marital breakdown. You can go up to 95% of the value of the entire home, rather than the 80%, which is allowed on a refinance. So that's one kind of program. The other one is if you split and need to withdraw down payment from your RSP again to buy a new house, you have access to that as well. And then the 30-year amortization to extend it so that based on if you have support payments, you're going to be able to qualify for a better size home or a bigger size home because you have a longer amortization period. So these are the programs that are being rolled out to help, borrowers in a marital breakdown be able to kind of move on with their lives.
So you had mentioned that if they're needing to come up with down payment, and one of the sources for that down payment could be their RSPs, they would qualify again under the first time home buyer program. But maybe let's expand a little bit. We talked about it before. Is how much can they withdraw from their RSP to use as a down payment for another home, and what repayment requirements are needed?
The same as if you were a first-time home buyer. So you can access up to $60,000, and you have 15 years to repay it. And there is a couple years of there's not a requirement for a couple of years until you start repaying it back. So the same rules that would apply for first-time home buyers, a home buyer's plan with CRA. The only stipulation for the marital breakdown is you have to be separated for at least 90 days and living apart to be able to qualify for the home buyer's plan under to borrow again for the down payment.
Okay, so here we're talking about one spouse buying out the other, obviously, right? We talked about the 90 days have to be separated. But what if, for whatever reason, one spouse is getting to keep the house? Part of the agreement is, hey, honey, you get to keep the house. I don't know if you're still calling her honey or him honey, but that other,
Highly unlikely.
this probably not calling each other honey, but hey, honey, keep the house. Now that other spouse is on their own, and does that change any of what they would need to do in order to buy a house?
Same qualifications that we, so let's say there's a spouse who needs to take over the existing mortgage or to get a new mortgage to pay out, to replace the existing mortgage to pay out debts and pay out the other partner. The same qualifications apply. The debt servicing ratios apply. All of that still remains the same in terms of, trying to qualify for the existing or the new home. What happens now typically when you have a marital breakdown is the support payments. Typically, so when there's children involved, there'll be child support as well as, if there's any alimony, and alimony only applies based on, I guess I'll leave that to lawyers when they deal with the separation agreement, how alimony is calculated. But now that if you are receiving spousal support or child support, we can use that as income. And if you are paying it, we are using that as a liability. So that's how it changes for, couples, taking over the existing or purchasing new, is that becomes either new income or a liability on the application, but the same other qualifications apply.
Right. So, we're talking about, in spousal separation and, what would be required for the spouse leaving the matrimonial home and buying another home. But now the spouse that will be staying in the home, they have to go the same process as well. They have to get pre-approved. They have to qualify based on, their income, and possibly minus any support that they may have for children or alimony, right? So that's going to be deducted. So obviously in a lot of cases, they may not be able to qualify to buy the other spouse out. And I guess at that point, their only option is to sell, split up the equity, and then each spouse tried to do whatever they're able to do as far as maybe qualifying on their own for their next purchase. Am I correct in that assumption here?
Correct. So typically I love being able to talk to clients at the stage where, right, it's kind of solidified in their mind that this is the direction they're going, even before they talk to a lawyer, their family lawyer draft up the separation agreement, is to have a conversation about, hey, based on the numbers and what you've originally discussed, is this feasible for you to keep this house? Is it feasible, if you're in the spouse that's leaving, right? If it's feasible, a mortgage broker can run those numbers based on the existing situation, and then also some hypotheticals, some child support numbers that we could be throwing around. Just a ballpark. We can definitely run those scenarios to see what is needed to qualify to either remain or buy new. So I appreciate having a conversation with the clients early on, and also I think it's very advantageous to have the mortgage broker also, when you're doing up the separation agreement with the family lawyer, to have communication with the family lawyer, because the separation agreement and the new mortgage, the separation agreement has to be structured to be able to be used to kind of structure what's supposed to be on the mortgage, and they have to be consistent. And if there's any inconsistencies, then you're spending more money to go back to the family lawyer for revisions. So, and that's, billable hours. So it can get more expensive if you're having to go back and forth. So communication with the family lawyer and the mortgage broker will help efficiency and keep costs down. Yeah, I guess at this point, it's very important to have that discussion early on, mortgage broker running numbers.
So even before they come up to an agreement, kind of getting sort of get an idea, I don't know if be a full pre-approval, but an idea of what may or may not be possible going forward, depending on
what could be a realistic, viable option. Do you know what I mean? So as if we're running numbers, could this be realistic? Are we close to being a viable option? What needs to be tweaked, right? So in some situation, this is really just a pipe dream. Like I could easily run numbers and say, well, based on everything here, this is impossible, right? Or I can say, right? Based on these numbers, these are just some small minor, adjustments that need to be made, and this is possible. So it's an easy enough formula to do for anyone, thinking, going through this process. So it's good to be more proactive rather than setting yourself up and going to the lawyer, drafting up paperwork on a decision that by the time it hits the bank, the broker or the banker, based on debt servicing ratio, the banks aren't going to lend if it doesn't qualify, regardless of what is on the separation agreement.
Mm-hmm. Right. So do you have any other thoughts or advice that you might have for, people going through a marital breakup?
I suggest, well, the marital relationship like this, the programs involved, the spousal buyout program involved, there's three insurers, their guidelines are slightly different. And so using someone who is familiar with this program, the insurers guidelines, different lenders and their lender nuances, working with one who is experienced and has done a few, I think it's going to be advantageous, because if you're going through a major transition in, marital breakdown is never easy. Having a professional that can handhold you along the way and have answers as you're going through an uncertain time, I think that's the big advantage. So having a conversation with your mortgage broker, your bank, or even a banker, and say, like, do you know the spousal buyout program and all the insurance guidelines? Do you know what needs to be on my separation agreement? Do you know what I mean? So all these questions. So finding someone who is experienced in this very niche product can save you a lot of, money and time.
Right. Well, you kind of brought up something here that I definitely want to emphasize, right? That, is, yes, maybe, you're comfortable with your bank, but, that particular person in the branch may not have that specialized knowledge to really know the nuances, as you said, of these programs. But also, I always recommend my clients to go to a mortgage broker, because they have access to all the different lenders, and some of the lenders look at these files differently. And Chita, someone like Chita, can definitely look at your particular situation and help you determine which lender is going to give you the best mortgage for you, whether that be terms, interest rate, but have the right program and guide you that way. And a bank typically doesn't have that. They only going to have their product, whereas you have access to hundreds possibly of different lenders to work with.
There's lots.
There's lots, and finding that right lender to help you with your particular situation is always key. And so I think, Chita, unless you have, again, any final thoughts, maybe we'll wrap it up for today.
Guess that's it. Just a recap. So marital breakdown kind of resets you as a first-time home buyer in buying, so that there's the benefit there, right? Just trying to see my London notes here that I wrote. Yeah. So also with the spousal buyout program and how it's structured like a purchase. And so typically it's you're dealing with, your family lawyer for the separation agreement, and then you're dealing with a real estate lawyer for the real estate transaction. So that's, those are the kind of legal assistance that you need. And then you're right, in terms of being a mortgage broker, I have access to different lenders, and where it benefits is, just for example, like out of all my lenders, so because it's done as a purchase, it'll be a private purchase. And because the two parties, you're familiar with each other, some lenders, when they treat purchases, they don't allow you to use the same lawyer on the transaction. Right. So then you have to have two legal costs, where, I have lenders, if you have a couple that's amicable and I have a lender that says, yeah, it's a private sale, they know each other, will allow you to use the same lawyer, you just save yourself on the legal fees. Right. So these are the little nuances that a mortgage broker who is familiar with this product can provide, as opposed to, dealing, let's say, with a banker who only has one option, right? So, and anyone who doesn't know the program, doesn't know some of these lenders and what they allow and not allow. And like with all the three insurers, they are different in their guidelines, where, one insurer Do you know what I mean? It's just enough money for a spousal. Like the buyout, no debts paid out. One of the insurers will allow joint debts, and one of the insurers says, you know what? As long as it was a debt that was accumulated over the matrimonial period, we'll allow that payout as well. So all of these things and knowledge of all those, nuances will help when I'm looking at every client and what their needs are and which lender or which options are available to them. Right. So that's it. That's all I had to say. It's a mouthful.
Yeah, you did mention one thing that maybe you want to talk about a little bit here. You're talking about, of course, when you're going through the process, you're going to have a family lawyer that's going to be dealing with your breakup or divorce, right, and separation agreements, and you're talking about real estate lawyer for the transaction. Do you definitely recommend that they have two different lawyers for each part of these, or can they still use their family lawyer for the real estate transaction?
Conflict of interest, to use your family lawyer for the separation agreement and then real estate transactions. It's, you know what I mean? It's a, could be seen as a conflict of interest, right? And I'm personally, like, I've seen if the family lawyer can do both, that's fine, right? If a family lawyer predominantly does family law, and doesn't, barely dips their feet in real estate law, and they're not going to be very efficient. I don't know if you want to be paying your $400 an hour family lawyer to be doing, like, to fumble around on your real estate transaction. So, do you know what I mean? So that's why I recommend just like, having two, because your real estate lawyer will be extremely efficient doing the real estate portion of it. And then the family lawyer that you're paying, far more money per hour to do what's necessary. You know what I mean? Draft up that necessary legal separation agreement that's going to outline what's supposed to be outline the mortgage and how it's structured.
Right on. Okay. Well, Chita, your advice is always great as always. And, we want to thank you for joining us and sharing with the information with everybody today. And we'll wrap it up for today. We want to wish everybody a wonderful week. It's going to be a beautiful week, I think. At least it's beautiful today, and I'm hoping the rest of the week's going to have nice weather as well. And of course, who are we cheering for tonight? Is it tonight or tomorrow, the game?
It's tonight. It's no, we can wrap up the first series tonight. Come on.
Okay.
Yeah. We're up 3-1. This is the day.
It was tomorrow. All right. Well, hey, then we know what we're going to be doing tonight. So for now,
Oilers.
have a great day. Take care. Bye now.
Bye.